forms of debt. During the Great Financial Crisis, credit card debt became the big bad wolf. And then, of course, we talked about the ninja loans, the subprime loans. So those were our bad ones. Today, it's the buy now, pay later and student loan debt. Okay, what's household debt look like on these two? And then what's equity look like? Household debt peaked in 12.7 trillion in 2008, and mortgage debt was 10 trillion. Credit card debt reached 870 billion. But the delinquency rates, because like you said, there was no, we're not going to foreclose on you. It was just legit. It was real. These were the real foreclosures. Hit 10% by the end of 2009. And then they just started foreclosing on everyone. That became that tsunami. So if we flip it over to today and look at 2024, household debt's grown to $17 trillion. Holy Toledo. Mortgage debt, interesting. The largest component is 12 trillion, so it's only 2 trillion more than 2008. Credit card debt reached $1 trillion. Oh my goodness. Auto debt surged to 1.6 trillion. So look at that. Auto debt doubled. Auto debt still got problems. Auto loan delinquencies today are through the roof. If you go look at the Manheim used car index, you can see it go shoot up, hit a ceiling, and it's literally coming back down to the trend line. And because banks did this and over leveraged and allow people to over borrow, this one has to work itself out. Delinquency rates today though, 2 to 3%. What's the key difference? Even though debt is higher today in nominal terms, it's actually lower today than it was during the Great Financial Crisis as a percentage of income due to the stricter standards. So that house of cards, the dominoes that we had happen, it's not happening right now because technically, even though the consumer has more debt, they're actually less leveraged. Does that make sense? They're less leveraged. Okay, well, let's look at home equity then. Maybe it's home equity is going to be the problem. Maybe that'll finally take everything out and cause it to crash. Okay, so by 2009, total home equity fell 6 trillion from its peak and created those underwater homeowners. We had 3 million homes get foreclosed on from 2007 to 2009. Well, where's home equity today? Home equity is at a record $30 trillion more than the Great Financial Crisis. Home prices surged. Now, this is the problem, though. This is the unaffordability. Over 30% across the U.S. Foreclosure rate is currently less than 1%. So today, yes, consumers have more debt, but it's less a percentage of their income. Consumers have more equity, and consumers have just a little more housing debt. But overall, because the equity is so big, they're fine. So what's going to keep this really high? And we mentioned this briefly, but I want to go into the exact numbers on new construction so everyone's on the same page. 2005, we peaked and we built 2.15 million homes at the peak of the housing bubble. And then 2006, we started declining. We built 1.8 million permits were issued. So in comparison, from 1960 to 2000, we only did about 1.5 million annually. Then the bubble pops. You can go look at this data. It's right on the Federal Reserve's website. You can see we issued 900,000 permits in 2007 and then 500,000 permits in 2009. So we go from a peak of 2.15 million to 500,000. Housing starts in 2008 fell to 906,000, and we were starting over 2 million homes at the bubble in 2005. So one was permits, this one's housing starts. So then what happens to the new construction supply? New construction, because the banking industry crumbled. So I became the repo man, the hatchet man, saying, I'm sorry, homie, I need you to give me back that plat. I need those 12 lots. By the way, I'm going to need the title to your motorhome. I'm going to need to cross-collateralize this against your house. I'm going to need to cross-collateralize this debt against your duplex, and I'm going to take that over there too. I'm sorry. So I literally went to being the hatchet man. And then we did a whole bunch of foreclosures, and you and I had a lot of fun during that era. What happened, though, is the builders and developers, they just stopped building. So new construction is 600,000 to 800,000 units a year for the next few years. For full perspective, from 2008 to 2023, we built roughly 15.5 million homes. Pre-Great Financial Crisis, we were doing 1.5 million homes a year, and we built 17 to 20 million homes. That means the shortfall was 2 to 4 million homes less between 2008 and 2023 compared to the previous decade. The low estimate by The Economist is 1.6 million units. The high estimate is 6.5 million units, with artificially low supply because the Fed took it away from you with their high rates and their monetary policy. So when I say the Fed broke housing, this is what I mean. They broke housing because new construction stopped.